Good afternoon, everyone. Well, I'm excited to be here today speaking on behalf of the department about the budget process and Gateway and some of the process changes that we're going through. As many of you in the room know, if you've been around over the past year or two, the budget process is undergoing some pretty hefty changes compared to what it's historically been. So during last year's legislative session, Senate Enrolled Act 321 passed, and it outlined a variety of changes to timelines and processes and dates for budget. So we're going to cover some of those items today, and we're going to discuss 2017 budgets and some of the differences you can look for in 2018, and then forecasting ahead to budget 2019, which is when the process really hits home. So Senate Enrolled Act 321, 2016, it had a variety of changes to the budget process. We have several of them listed on the screen. I think these are some of the most noteworthy ones. The shortened review for taxing units, max levy calculations, they were simplified and streamlined effective last summer. Property tax caps and the impact they play in the budget process. That was something that's new for last year and that we're developing and continuing to work on this year. And then the biggest change of all, at least the biggest change as far as the department's process is concerned, is the official budget order certification deadline, which is currently February 15th. And remains February 15th for your 2018 budgets, but effective for 2019 budgets, will move ahead by about a month and a half. So Senate Enrolled Act 321 had a variety of objectives. There was improved transparency for taxpayers and better information for taxing units, and that applies to both county units and to other units at the counties. And of course, earlier budget certifications so that you as a government unit begin the year with a much clearer picture of what the certified budget is going to be. So when I speak to folks about budget streamlining, I typically frame it as a 3-year process. And the years that are up on the screen refer to the budget years themselves. So we're roughly 1 year in right now. So for budget 2017, we had the introduction of budget streamlining updates. For 2018, we've been doing a lot of work to improve upon processes from last year, to try to collect some things that we didn't collect in the past and provide you with some tools that wouldn't have been there in the past. And then for budget 2019, at that point, all the timelines that are going to change as a result of 321 change, and our deadline for certifying budgets to you also changes effective for budget 2019. So one of the biggest items that came about from 321 was the concept of a shortened budget review. So for a taxing unit who adopts a budget that's fundable when you account for their anticipated levy and for their anticipated miscellaneous revenues, and for a taxing unit who adopts the levy below the maximum. We got a question in the back. For a taxing unit that adopts a levy below the maximum and whose budget is fundable, we go through what we call a shortened budget review process, which dramatically shortens the amount of time that your budget field representatives spend working on the budgets for the individual taxing units. Some stats that I thought were kind of cool from this past cycle. So we reviewed 2,464 budgets. So we're talking counties, townships, cities and towns, schools, libraries, special districts, and some conservancies. We reviewed 2,464 for the 2017 budget cycle, and of those, 1,031 went through streamlined budget review, or the shortened budget review. And this is really key. For us as an agency, in partnership with you as a county government and in partnership with the other governments in your counties, to ultimately hit that December 31st and January 15th budget order certification deadline. There's a lot that goes into it, from technology matters to policy matters, but also to the budget adoptions themselves and the kind of information that we're going to have to review. So it was very encouraging to us to see this level of participation in the shortened budget review process this last year. So we'll do a quick review of Budget 2017. On this first bullet, of course, much of the credit, as Courtney mentioned earlier today, goes to you. For the fourth straight year, tax bills for all 92 counties went out on time. That's really valuable to us. It's something that we spend our entire year building up to, and it's the one objective that we set above all others, because it's the culmination of the government budgeting process. So that begins all the way with the prior year assessment, effective on January 1st, moving through the following year, budget adoptions, budget order certification, and tax bills. So thank you all very much for all the work it took to get tax bills out on time. And then also, this is the third straight year that we've had all 92 budget orders certified by the February 15th deadline, which is wonderful and something that we take a lot of pride in. And I think that you should take a lot of pride in as well. So Budget 2018 is the second year in our 3-year budget streamlining cycle. Relative to 2017, when we were first introducing the idea of considering the circuit breaker credits, and relative to 2019, when a lot of the timeline changes are fully in place, 2018, I would say, is the transition year. So it's going to feel like the changes out of these 3 years are the lightest, but there are still some notable ones. And the biggest one is pre-budget. So the department is collecting this year for the first time some additional information in advance of the budget cycle. And among the items that we're collecting are those that are listed up on the screen. We're going to use this information for a few different purposes, but the biggest one is to hone our levy estimates that we'll be releasing this summer, and ultimately to use those for our circuit breaker estimates that we'll be releasing before the end of July. We also have some logic built in that we're going to use as a result of information that we're collecting here. So for instance, we're asking units that are subject to binding review to identify for us the body that's going to be adopting for them. So we're gonna build in some logic on the Form 4 that accounts for that. We're also collecting a lot of debt information up front that we haven't collected early in the past, and we're working on a way to build that directly into the regular debt worksheet for taxing units to make the process feel more seamless as they navigate from pre-budget to the normal budget cycle. So as of Monday, when we last checked our stats on pre-budget, somewhere around 30% of all taxing units in the state had completed and submitted pre-budget to us. There's no official statutory deadline for this. The way it's worded in statute is that it's going to be submitted at a deadline set by the department. So we're asking folks to have pre-budget completed by June 5th. And I think that we're on pretty good track to get there for a lot of folks. So if pre-budget's not something you're familiar with, if you haven't had a chance to take a look at it inside Gateway, it's going to be within the Gateway budget application. You're welcome to reach out to me or to your budget field representative or to our Gateway support team, and we'll be happy to work with you on it. Our experience with it so far has been for many taxing units, this is a process that takes a matter of minutes and not hours. If you have some more complicated topics to consider, if you have debt, for instance, it's possible it's going to take you a little bit longer. For counties, we're asking for a little bit of extra information around mental health and developmental disabilities. But all things considered, our experience so far has been that most folks are finding this to be a pretty quick process. And we think it's going to pay a lot of dividends when it gets to our July numbers. So speaking of which, this is going to be our second year releasing a series of numbers in the month of July. So before July 15th, so the key day is July 14th, the department is going to release estimates of maximum levies, of debt service levies and of cumulative fund levies. And then before August comes about, we will release estimates of circuit breaker impact or property tax cap impact and miscellaneous revenue. There's going to be a number of different uses for this information. The county councils are going to be using some of these figures, and our hope is that some of the taxing units choose to take advantage of these numbers that we're releasing as well. So for maximum levies, for counties, it's going to be straightforward. We're going to be looking at the civil max levy type, but if you happen to work with another taxing unit, among the types that we're collecting are township fire, fire territory, school transportation, and school bus replacement. And the questions that we're asking through pre-budget, in many cases, are going to give us information we need for adjustments to these levy estimates. So just up on the screen, I've put together, this is a simplified version of a max levy calculation. It doesn't have all the various twists that are going to come into play, but these are the numbers that we're taking a look at this summer. So to give you an idea of some of what we're collecting, from you as a county unit, we're going to be looking at CCD adjustment and mental health and developmental disabilities. And so it's for these reasons, for the numbers up here, that it is important to us that you complete the pre-budget worksheet so that we make sure that you and the units in your county are using levy figures based on the best information that we have available to us. So again, the prior slide, it wasn't comprehensive. It didn't account for appeals, for instance. Another element of Senate Enrolled Act 321 from 2016 was a permanent adjustment to maximum levies for the financial institutions tax. So the way that we carried that out, it was a one-time increase to your maximum levy effective for 2017, meaning that you won't be seeing FIT as part of the maximum levy equation starting with the 2018 budgets and moving forward. So one of the big elements of maximum levies is the assessed value growth quotient. The assessed value growth quotient is a number calculated by the state budget agency. It's released in the summertime before July 1st, and it's a measurement of the non-farm personal income growth over the last 6 years. So actually a common misconception is that it has to do with assessed value growth, and that's actually not the case. It's based on incomes. The trend over the last few years has been that this number is going up. We won't know the actual number until the end of June, but for 2017, just for reference, it was a 3.8% increase. So we mentioned earlier with the maximum levy estimates that we're going to be looking at a few different adjustments to the maximum levy. One of them is for the CCD fund adjustment. So if you've been around for a couple budget cycles, you'll likely remember that prior to 2017, the cumulative fund adjustment took a couple different paths. It was either a CCD adjustment where there was comparison between a series of other cumulative funds and levies from 1984, I believe. That process was simplified last year to where it's only the CCD fund at this point. If you have questions about the CCD adjustment, I would encourage you to speak with your budget field representative. They're going to serve as a really good resource, and this is an area that does require some attention if it's something that's new for you. So if you have questions about it, strongly encourage you to reach out to your budget field representative. For counties, we'll also be looking at adjustments to the maximum levies for mental health and developmental disabilities. Last year, when we released our levy estimates, for lack of having better information or information that we thought was going to be appropriately conservative and reliable, we assumed that everybody was going to be at the maximum for mental health and developmental disabilities. In practice, that's not the case, and it's particularly not the case for developmental disabilities. So part of what we're collecting through the pre-budget worksheet is your estimate of what we should be using for mental health and developmental disabilities. So again, in the interest of trying to project the most accurate levies that we can in the summertime, we'd appreciate your help with providing this information through the pre-budget process. Okay, property tax cap estimates. I'm going to spend probably 8 or so slides going through what these estimates are and how they're calculated and what the impact is to you as a budget formulating entity and what it's also going to mean for your taxing units. So property tax cap, we use it interchangeably with the term circuit breaker. And I know that most folks, probably all folks in the room, are going to be familiar with this. But there's a cap on you as a taxpayer in your individual property tax bill, and without accounting for referendums or for exempt funds, the cap is going to be your gross assessed value less any exemptions multiplied by the type of assessed value cap that you have. So either 1% homesteads, 2% for non-homestead residential, farmland, long-term care, a few others, and 3% for commercial and personal property. So each spring, as you all calculate tax bills, of course, you see an impact of property tax caps. Well, starting last year for the first time, taxing units were instructed to consider the impact of the circuit breakers when they were formulating their budgets. For a lot of folks, a lot of counties in particular, schools, some of the more sophisticated taxing units, this was already part of the budget process, but for a lot of people this was something that was new. So I appreciated that Courtney laid it out earlier and mentioned that this is going to be a process that takes some time to adjust to, and I totally agree with her, that's the case. It is a big adjustment for folks, especially those who weren't previously considering the impact of circuit breaker, to start thinking about circuit breaker while they're formulating their budgets. But so overall what happens is in the spring on a taxpayer level, the individual tax bill will have a circuit breaker impact calculated, and then the total sum of that circuit breaker impact is added up at a taxing district level and then allocated among individual taxing units within a county. In the summertime, we're repeating effectively the same process, coming up with an estimate of circuit breaker impact on a tax bill level, summing it up at a taxing district level, and then allocating that out to the taxing units. So timeline-wise, we're required to release our estimates before August 1st of each summer. This is going to be our second time around doing it. As we've been mentioning, pre-budget is going to play a big role in what those numbers look like this year. So we're asking folks to have that information submitted to us by June 5th. And for those who don't, we're going to be calling and emailing and trying our best to get as close to 100% submission on this as we can. So among the data that we're collecting that's going to be most impactful for circuit breaker estimates are the 3 bullets that I've listed here. And those are the June 30th cash balances for debt service funds, the county levy adjustment estimates, and then updated debt service payment estimates. The first one in particular, the June 30 cash balance, this one is going to be absolutely huge in terms of the estimated debt service levy that we calculate. So if you are in a county that has a unit with high debt, or with even just a variety of debt, and these are often going to be school taxing units, the June 30 cash balance makes a big difference in what the ultimate levy ends up being. That can be the same for a county unit or cities and towns as well. So this number is going to make a tremendous difference. What I'm expecting that we're going to see in many cases, not all cases, but in many cases, is if somebody were to compare the debt service levy estimates that we released last summer to the debt service levy estimates we released this coming summer, I think that we're typically going to see a pretty large decrease. And that's going to have a cascading effect through the estimated circuit breakers that we calculate, because the higher levy is going to lead to a higher projected rate. Higher projected rate on a tax bill level is going to lead to more estimated circuit breakers, and then those higher total circuit breaker amounts are going to be allocated among the taxing units. So I think this is going to be perhaps the most major change that we see this summer, and I'm personally very excited about it and what it's going to mean for the numbers. The levy adjustments too, like we talked about, mental health and developmental disabilities, those are going to make a big difference. And then we're collecting, if you've gone through pre-budget already and if you have a debt service fund, as you know, then we're collecting a pre-budget debt worksheet that looks very similar to the debt worksheet you complete during the budget cycle. That's also going to have a meaningful impact on our debt service levy estimates. So process-wise, for us as an agency to get to those estimates, what we use is the tax data and adjustments information that you submit to the department and to LSA. And actually, side note while we're all together, if you haven't submitted your tax data and adjustments files to the department and to LSA yet, please do that as soon as you're able to. Our data analysis team is going through the compliance process, and those figures are important for a variety of reasons. We get a lot of, as I'm sure you do too, we get a lot of public records requests for tax bill data, but then just as importantly, we're going to be using that information for our own summer estimates. And so if we don't have your 2017 tax bill data to work with, we're going to be looking at some sort of situation where we're going back to 2016, for instance. And I think the farther we get from current year, the less reliable those numbers are. So if you haven't yet submitted your tax data and adjustments files, I'd ask that you do so. So again, process-wise, we'll calculate an estimated circuit breaker impact on a parcel level. We'll sum that up to each of the individual taxing districts within the county, and then the total amount of those circuit breaker credits will be spread for our estimated amounts to the individual taxing units. And what we end up doing in the summertime is saying what we think the impact is going to be by max levy type. What you'd find in the spring, when we're calculating circuit breaker impact and when the Auditor of State's office is distributing or working with you on the circuit breaker adjusted abstract, is it goes down to the individual fund level. So budget-wise for you, for the second year, we're going to have outright consideration of the circuit breaker caps in the budget forms that you complete. So if you've not been part of the budget process before, these form numbers may not be meaningful, but I can promise within a couple months they will be. Forms 1, 4A, and 4B are going to contain estimates of the property tax cap credits. And the main reason for that is that the cap credits are part of the overall levy calculation. Forms 3 and 4, so 3 is your public notice or your budget notice. Form 4 is the actual adoption ordinance. Those are going to exclude the property tax cap impact. So what that means is on Form 4B, where you have what we're calling a gross budget, a gross budget means you have the actual amount that you intend to spend paired together with your estimate of circuit breaker. All those figures are going to be used to calculate the estimated levy by that individual fund. Form 3 and Form 4, which are the public-facing forms, those are the ones that you can expect if taxpayers are interested in seeing. That's what they'll see. Those are going to be indicative of the actual dollars that you anticipate spending. And this is the same way that we did it last year. And this is going to be our second year of transition. And I'm going to talk in a little bit about what 2019 is going to look like, because we're anticipating it's going to look different from this. Form 3 also is going to contain the department's estimate of circuit breaker impact and the department's estimate of maximum levies. So we'll be populating that for you during the month of July. So in terms of what I think is kind of a normal sequence for folks working through the budget forms, and we recognize that people are going to go through them in different orders, but one thing that's a fairly normal pattern, we think, is for folks to start with Form 1. If you've not filled out the budget forms before, if you're not familiar with them, Form 1 is your line item budget estimates. It's broken down by fund, and it's also broken down by department if you're a departmentalized taxing unit, as counties tend to be. So what we typically see folks do, and what I would encourage you to do, is fill out the information in Form 1. You then have the ability to move that information through the click of a button to Form 4A and Form 4B. 4A is a summary of the budget, so it takes it from the line item level and summarizes it at the department level and the fund level. And then Form 4B is otherwise known as the 16-line statement, though in practice it has about 21 lines. You can also pull the information directly through to Form 4B. We also give you the ability to pull information to Form 3 if you're working your forms in sequence that will allow you to do so. It's at this point that we know not everybody's quite there. We have some folks that fill out Form 3 in the interest of advertising their budget before they've completed the rest of the budget forms, and that's okay. And then Form 4 is going to automatically pull forward information from Form 4B for you. So we'll start getting into a few of the process changes that came about last year outside of the budget forms directly. One of them is county council review. So if you've been around for at least a couple budget cycles, you'll probably remember the old county council review worksheets, which were submitted by all taxing units not subject to binding review. And they had a deadline. They had to have it submitted, I think, before September 1st. And then county councils would review the information that was submitted on those worksheets and then would provide recommendations. And there were penalties associated, and it tended to be a bit of a messy process. Well, Senate Enrolled Act 321 got rid of that version of county council review. Now, they're not totally out of the game. They still have responsibilities, but the county council review worksheet that taxing units would submit, and then the county council review process that would take place in the month of September is no longer part of the equation. But in its place, county councils do still have a responsibility, and that is during their first meeting in the month of August, county councils are tasked with reviewing the department's estimates of maximum levies and circuit breakers. And the idea behind that is, in concept at least, the county council should have a picture, a broad picture of what the coming year's tax and levy situation could look like for all taxing units. And part of the idea is that they could provide a non-binding recommendation to the taxing units. So to facilitate that, statute says that the county council has the option to invite taxing units to attend and participate in that first August meeting. And if a taxing unit comes to that meeting, they're supposed to be offered the opportunity to present. And I think that if we were to think about how that interaction could go, thinking in a philosophical world, I think the idea was probably that the county councils could recommend that a particular taxing unit not meet its maximum levy or make certain budgetary considerations, ultimately reducing circuit breaker impact. I don't know if it actually plays out that way in county councils. I have a guess for whether it does or doesn't, but that's the process. So if you are in regular communication with your councils, I would encourage you to make sure they're aware of this process. As much as possible, we'd love for folks to take it seriously and to use this as one tool out of many during the budget process to collect input on the budget decisions that taxing units are going to be making over the next few months. So after that first August meeting, the council is going to issue a non-binding recommendation based on the maximum levy and circuit breaker numbers that they received from the department. If the council doesn't make that recommendation, then the taxing units in the county are supposed to receive meeting minutes from that meeting. So there are no penalties associated with this process, which again is a change from the old county council review process that relied upon the county council review worksheets. But as much as possible, we still do encourage counties to make this a serious part of their discussion at that first meeting in August. Another change from Senate Enrolled Act 321 was the elimination of the auditor's certificate that was gone last year and that remains gone this year and moving forward. Okay, I'd like to get into a series of upcoming date changes. So not everything takes effect for either 2017 budgets or for 2018 budgets. The one that's on the screen right now is for 2019 budgets. And this is going to be a big change because the date difference is big. So right now for units that want to establish or reestablish a cumulative fund, the deadline for that is in the summertime. It's a before August 2nd deadline. This changes next year, so when we're talking 2019 budgets, that changes to before May 1st, 2018. And what that means is that a county effectively, or any taxing unit, needs to effectively have completed the entire process from the beginning of the year, so from January up through the end of April. So again, this is going to be a big change. If you have cumulative funds, if taxing units in your county have cumulative funds and you're considering either reestablishing those or you have been considering establishing one in the future, please pay careful attention to this date change. We're hoping not to see too many units get caught off guard by it. We have additional changes that are ultimately going to impact the pre-budget process. So effective next year, we're going to be collecting some new information about estimated debt service payments. The deadline in statute for that one is before May 1st. What I think this is probably going to look like as we sit here a year out is that we'll open up pre-budget even earlier next year, or perhaps we'll open up a component of pre-budget earlier next year to allow folks to knock this out before this May 1st deadline. And then of particular note to you as auditors, starting with 2019 budgets, for the first time we're going to be collecting parcel level certified net assessed values. So today, or in today's CNAV environment, when you submit your values to the department and when you make them available to taxing units, you're doing it at a taxing district level, summed together. So you've got your real property and personal property, various adjustments that are made. Beginning, and that'll still be the case when you submit them before August 1st this year. But beginning next year, that's going to be at the parcel level. So you can look for guidance from our agency over the course of the next year on what that's going to mean for you, what that's going to mean software-wise and process-wise, and how we're anticipating collecting that information. So then finally, among the date changes, I'd say, again, the big one is, at least from the department's perspective, part of what 321 was ultimately leading to was the earlier certification of budget orders. So today, this deadline is February 15th. It remains February 15th for your 2018 budgets, but by the time we get to 2019 budgets, so 2 budget cycles from now, the deadline for budget order certification becomes December 31st, with just a couple exceptions. If there's a taxing unit in your county that's issuing debt after December 1st, or if there's a taxing unit that's going to file a shortfall appeal, the deadline moves back, but even then it only moves back by a couple weeks. So this is going to mean a lot of things for us as a department and for you as, of course, users of the certified budget information. For us, it's going to mean technology changes in particular. It's going to mean process changes, and we're going to be looking to work with the local units of government, especially with the counties, to collect ideas on what we can do to actually make this a possibility. So I can tell you that today, we're scrambling up to February 15th each year with our last budget orders, and that was the case this year. And so we're going to require a lot of help to actually get this done. So I'm going to lay out a few of the things that we're anticipating doing, and then I'm going to ask for your assistance with coming up with ideas for what we can do to actually make this a reality. What's going to be cool about it when it does come into play is I think with just about any organization, you would like to think that you can begin whatever budget period you're going into. So in our case as governments, you can begin the year going into it with an idea of what your actual certified budget is going to be. I think that's a worthwhile goal and something that's going to be fantastic when we have it in place. So we'll go through some of the changes that we're looking at for budgets in 2019, and And then again, I'm going to ask for your help. Give us ideas, give us your feedback, your thoughts on what we can do to make this happen. So thinking about the budget forms themselves, the core change that we're expecting is that Form 4B, or the 16-line statement, is going to be flipped on its head. So right now, if you can think about that 16-line statement, you begin with budgets and you work your way down, and then at the very bottom you've got levy and you've got tax rate as well. The idea for that is, starting next year, we're going to reverse this, and we're going to put the levy at the top of the equation, which for a lot of taxing units we think is probably where they actually begin the year thinking about anyway. So thinking about the pool of resources that are going to be available to them, and then starting to work their way backward to figure out what the spending priorities are going to be. Not too long ago, we tried to measure how many taxing units are actually at their maximum levies. I don't remember what the exact number is, but it was somewhere in the 95% range, which again tells us this is probably a lot of folks beginning with the levy in mind, and then starting to work their way backwards. So the Form 4B, as it's going to exist in the future, what we're picturing is putting the levy on top of that form, and then we've been debating whether the bottom is going to be budget or operating balance. But we've got a few different models of it that we've mocked up as an office. But one thing that I'm curious about, and I'm going to be here for the next 2 days, and I'd love to talk to you one-on-one. Part of what we're curious about is, when you think about the budget process as a county government, when you think about it for the special units for whom the county adopts budgets, and the other taxing units that you work with, we're curious to know, what actually is your process? Do you actually think of the Form 4B or the 16-line statement in a different way than how it's laid out? And if you do, come and talk to us. Fred, I'm sure, would love to know these things as well. Reach out to us. And we're going to be reaching out to you as well to try to collect ideas. As Auditor Klutz mentioned this morning, something that I know the Auditor of State's office is committed to, and something that has been very important to Courtney in her time leading the agency, has been to try our best to partner with local units of government. And the best ideas that we get, and I mean this sincerely, the best ideas that we get come from communication with you. So I'd love to talk to you over the next couple of days, or if you go back and you go through the budget cycle this summer and you give thought to what the actual process looks like for you, please reach out, and we'd love to know what your ideas are. Form 3. So Form 3 is not going to see significant changes this year. The Form 3, again, is your public notice to taxpayers. It's got your anticipated budget and levy on it. It's going to feel similar when you fill it out this year. Again, keep in mind, it's going to have the department's estimates of circuit breaker impact and maximum levy, and that's driven by statute. After you submit the Form 3, your taxpayers and you are able to review the information on budgetnotices.in.gov. This is our 4th year, it's hard to believe, it's our 4th year with budget notices serving as a resource for taxpayers. And so we regularly encourage folks to check out when their taxing units are going to be holding their budget hearings and their adoption meetings, and to find information about their anticipated budgets and levies. It's a really good source of information. So if you have taxpayers in your county that come to you and want to participate in the process, or are curious to learn more about the other taxing units, even for you as a county official and for the staff in your office, I encourage you to check out budgetnotices.in.gov and take advantage of some of the information that's out there. So we're almost wrapped up with what I wanted to discuss on the budget process, but I did want to give just another reminder or two on the Form 3, because Form 3 is a crucial part of the budget order or the budget timeline. Form 3 must be submitted at least 10 days before your public hearing. Up until last year, but not counting 2017 budgets, there was also a September 14th deadline That deadline is gone, so now the only deadline is 10 days before your public hearing, which I think is a positive taxing unit friendly change. It gives you more options should you need to make a change, or just you're not at that point in your budget cycle by the time September 13th or 14th comes about. Another reminder is to schedule at least 10 days between the public hearing and the adoption meeting. And so as we get ready to transition, I've got a few other topics I intend to cover while I'm in the room with county auditors. I did want to let you in on a secret that we haven't told any other taxing units or audiences yet, and that's very quietly 2 days ago we opened up the budget forms. So you are able to get into Gateway Budget and start making changes today if you'd like to. And where I think that's going to be particularly useful is Form 1 for folks that want to start completing that. I know it wasn't the most exciting secret, but you're able to get into budget. This is significantly earlier than we opened it up last year. So I would encourage you to take advantage of that. We'll be releasing a memo or some sort of guidance over the next handful of days. We also, with us here, I wanted to make sure to mention, in the back of the room, kind of outside, so if you were to walk out and to my left, there's a group of support folks over there from the Board of Accounts and from our agency, DLGF. We have budget field representatives that are there. Ryan Burke is a field representative that's here. We have Gateway support staff, so if you have questions about Gateway or about the budget process, this is a good chance to interact with us and let us know what's on your mind. Okay, I wanted to transition to a few other topics that pertain largely to Gateway and to data submission from you as a county office. And one of them is a big picture one, and that is Gateway Abstract. So the abstract process for years has revolved around an Excel file that's passed back and forth between a few different offices, your office included, and a couple of different state offices. And it certainly served its purpose very well. But the Auditor of State's Office and DLGF have been partnering over the last year to develop a new idea for what the abstract can be. So what it's designed to be and the kind of information that we think folks could use from it, and ultimately trying to come up with a way that's going to make the process both useful for folks that want to use abstract data and information, and also, we hope, easy for you as county auditors and staff. So we've been working closely with the tax and billing vendors since last year on how we're going to implement this, and we actually have a test site that's up and available. And I have the link here, so if you have a copy of the slides, and if you need this later, you can email me. And all of you as county auditors and staff should have access to this today. If you're interested in seeing what Gateway Abstract looks like today, please go out there and check it out. We have a few counties that have been active in working with it and providing us questions and feedback, and it's been really useful for us as a development team to identify where things are going well and where we have things that we need to fix. But this is, I would say, maybe the biggest change or the biggest addition to Gateway probably since Gateway Budget. I mean, it's a big deal to our team, but we ultimately hope it's going to be a big deal to you as a county auditor, in that we use this as a tool to make your life easier and to come up with a more seamless process for communication of the abstract data between the various state offices and your office. Timeline-wise, we are anticipating that we're going to be using Gateway Abstract for 2018, so that means this coming year. We have a lot of work to do between now and then, but we're also hard at work on it. We're also planning to host training sessions in partnership with the Auditor of State's Office this fall. It would be wonderful to have 92 counties come out to these training sessions. We've talked about trying to get out around the state and do this on some sort of regional basis. And we want to work individually with you and using data that's applicable to you and that's going to be meaningful to you. So I think among the various trainings we do, this is going to be one of the more personalized ones that we've had a chance to roll out. More information will come out on that this summer as we go into the fall, but we would love to have your participation as we get there. CNAV. CNAV, as Courtney mentioned this morning, is due by August 1st. Historically, as Courtney mentioned, we have a dozen or 15 or 20 counties that will get it in around that deadline, and then we'll have more that come in over the month of August, and then some that go into the fall. We do receive a lot of questions, as Courtney mentioned, from taxing units about when are their AVs going to be available. So anything that we can do to help you in terms of meeting this deadline, please let us know. We're going to collect this information through the DCAF application. Again, DCAF stands for Data Entry for CNAV and Form 22. A couple years ago when we were building those, we decided to package them together because they're county auditor specific applications. It's going to look similar for 2018. So when I say 2018, we're looking at 2018 budget data. So your 17 pay 18 CNAVs are going to look similar. We're building in some additional functionality that hasn't been there in the past to give you an opportunity to tell us in advance about major AV changes. So what normally happens is the budget field representatives are going through budget workshops kind of through the second half of July all the way through the month of August. And then they'll come back in our office, and at that point we'll really start diving deep into the CNAV submissions and into the data that's been provided to us so far. And it's at that point we'll reach back out to you and ask about major AV changes. So part of what we're hoping to do is to collect some of that information up front and eliminate a step. And in the ideal world, this is going to lead to fewer CNAV resubmissions, which I think is something that would be in everybody's interest. And then finally, we have Form 22. So Form 22 we began collecting through Gateway. I think this is our third cycle doing it. So we had June 2016, and then in earnest we collected it for December 2016 distributions. And by the way, I'd like to thank everybody here for that, because we have 92 of 92 counties who submitted their Form 22 data through DCAF. So that means a lot to us, and we really appreciate your help with that. We just opened up Form 22 for your June distributions. So as you prepare to go through the settlement process, we have this component of Gateway up and ready for you. We encourage you to submit your Form 22 data shortly after settlement. The timeline that we've come up with as a recommendation is July 15th. And there are a couple things that are strategic about that. The first is, I think at least, associating Form 22 submissions with the settlement process is a natural thing to do, because they really come into play together. But we're also anticipating using some of the Form 22 information that's submitted, if you're able to submit it by July 15th, in particular for our estimates of license excise miscellaneous revenue. So if you're able to submit your information by July 15th, we would very much appreciate it. I have one other item that I didn't include in the slide deck, but that I wanted to make sure to mention, and that is the department, maybe a month or so ago, rolled out a new email address for additional appropriations. And it's a long email address, but it's additional appropriation requests at dlgf.in.gov. It's been used very actively in that time. Part of the reason for that is Linda Ebert, who was a key member of our staff for a decade, retired a few weeks ago. So we're very happy for Linda, but she was the recipient of a lot of those additional appropriation requests. So if you have additional appropriation information that you need to submit to the department, the new email address for that is going to be additional appropriation requests at dlgf.in.gov. That's all that I had. My contact information is on the last slide. Again, I'm going to stick around today, and I'm going to be here throughout the day tomorrow. I'd love to talk to you, especially about Form 4B and about the budget process changes that we're getting ready to go through. We also have the contact us page here on the slide. which is a resource you can use to find contact information for folks at the department. So with that, thank you all very much.